So, Lauren, we're up to the letter J.
Yes.
And we did think J is for jigsaw, but
or Joe or Jade or
yeah,
Joel.
there's lots of J's. But we decided that maybe June and July is also relevant, probably a little bit more relevant than Joe, Joel, Jade, whatever. So, yeah, June and July, and we're actually heading towards that rapidly, which is a bit scary.
Yes.
So do you want to clarify what June and July mean for us?
Oh, look, it's the classic time for anyone in the accounting bookkeeping industry because it's the end of the financial year, the start of the new one. So there's lots of things that need to happen to close off one financial year and things that you should do at the start of the new financial year. And generally we get towards the end of the year and go, oh, we should probably talk about this, but we're going to give you a bit of a heads up this year.
Yeah.
Because it's coming really, really quickly.
It is, definitely. So just in Australia, obviously the financial year end is the 30th of June. That's not the case for every country. Mm-hmm. So if you happen to be listening from a different country, this is Australian tax law we're talking about. But yeah, so end of June, that's when it all starts happening. So just for me, I just wanted to break this into June and then July. So for me, I actually find June or heading up to June incredibly busy. We do a lot of tax planning, a lot of conversations with clients. Come the 1st of July, there isn't that much we can do. In fact, there's probably nothing we can do. But from your job then as the person who's running your company, you've got a whole lot of tasks you have to do.
Yeah.
Which are end of financial year tasks. So we'll break it into those two components. So let's start with June and let's start with some of the things with tax planning.
Yeah, so tax planning is, I guess, something that kind of starts to happen before June, but it involves getting everything ready for June.
Yeah. So there can be some things you can do, to try and minimise your tax. But before you start doing any tax planning, there's no point doing that if you don't have your accounts up to date because no one's going to have any idea what you're planning for. So in all circumstances, we're assuming that you do have a decent set of financials and that you have the ability to have a discussion with someone, and I certainly recommend seeking professional advice.
Yes.
And then we can start making some decisions of what we can do. So probably the most important thing for this financial year, which still applies, is the instant asset write-off. It ends very soon. When does it end?
It ends on, the 1st of July, 30 June, 1st of July, so it's not being moved forward.
No, it's not. So we've been seeing over the last many, many years lots of movements in the instant asset write-off or at what level we can write off assets and whatever. It's been jumping all over the place. Mm-hmm. At the moment, as it stands today, any asset that you have, if you're considered a small business, which is pretty much anyone who'd be listening to this, there's no limit. You can write off any asset as long as it's business use, whatever, straight away. Come 1st of July, we go back to the old regime, which is essentially you'd be pooling your assets. You could probably write off something under about $1,000 and that's about it. So it's a significant change.
Yes.
If you are trying to quickly get something so you can get the instant asset write-off, I just need to stress you have to have the asset available and ready to use. So you can't go and order a car on the 30th of June and get it in September and claim that. So definitely seek some advice on that, but that is probably the most significant tax deduction you will be able to find this year. That's not just a normal thing. What else would you be suggesting? Maybe for me, there's quite a few things here, but one of them is potentially look at prepaying some of your expenses.
Yeah.
So if you are a business that has less than a $10 million turnover, you are allowed to prepay expenses up to 12 months ahead and claim them in the current financial year. That could include things such as rent and possibly interest on any loans. So that's a possibility. You might want to look at some of your paying a bit of extra super potentially for the owners of the business.
Yeah, having a look at how much has already gone in and what's left in your caps.
Mm-hmm. Okay, other things that I think are really important prior to the 30th of June are If you have a trust that you need to make the decision on where the distribution is going to be going, even if there is not necessarily going to be a distribution, you should still be minuting where it would go in the event that there was. And if you're going to be paying dividends, you need to record that those decisions have been made prior to the 30th of June as well.
So getting all your minutes in place.
That's exactly right, which is why it's really important probably to try and have a meeting with your accountant before that day so we can get all those minutes done. And then I guess the last thing for a business perspective is to look at making sure you've paid any Division 7A loans.
Yeah, so if you haven't, that can be then deemed a dividend, which you may not want.
No, that's exactly right. So what is a Division 7A loan? I probably won't go into that right now. I think if we haven't already spoken about it, there will be the opportunity for you to look at something to find out what that is. But if you do know that you have a Division 7A loan, which is just something that's going to apply if you have a company, potentially with a trust as well, talk to your accountant, make sure you know how you've got to repay that or have a dividend drawn or whatever it is that you need to address that prior to 30th of June. Go past that, you're probably too late. As an individual, is there anything you can think of that you might want to do in heading up to 30th of June?
Oh, look, obviously making sure that you've got all your receipts and everything in line because, it's really difficult to claim a lot of things if you don't have them. Making sure that you've got your diary with your working from home hours in there because, as we know, that's changing as well. We've done a whole episode on that, on the changes from working from home. So they need to change your logbook for your motor vehicle if you use that for work. Just making sure that you've got all of those receipts up to date.
Definitely. Now, if you think you've got a bit of extra tax to pay, there are a couple of things you could do. One of them is you can actually prepay as well. Not a lot, but you can prepay some stuff. So, again, be mindful of what you're prepaying. You can make some donations, which are tax deductible. Just be careful when you're making a donation; you can't get something for it. So
your care flight bears and things like that are not tax deductible because you're getting something for it,
or a raffle ticket or something like that. It has to just be a straight donation. You could also make some personal super contributions. Before you do that, please get advice on how much you can put into super, if it's worth it, etc.
And the other thing to note there is once you do get that advice and you do put that money in there, you do need to fill out a form which is your intent to claim a superannuation deduction. And you cannot claim that deduction until your super fund has written back to you and said, yes, you can do that.
Yeah, exactly. The only other thing I just wanted to mention, and I know I've already had this discussion with my son and probably every tradie that I know in the last few weeks, if you're buying tools, a lot of people think when they buy tools that they're going to just get that money back. And first of all, you're not. You're not going to get the money back. You're going to get the deduction for the amount that your tax rate is. So if you're on a tax rate of 34.5 cents in the dollar, which is probably a very normal tax rate to be on, if you pay $100 for tools, you're going to get back $34.50. You're not going to get $100 back. But the other thing to be careful of is if the tool is more than $300, we're going to have to depreciate it. And I think a lot of people don't look at that because they'll just go out and go, oh, well, if I just bought $2,000 worth of tools, okay, is it $2,000 worth of tools that are all under $300 each, or is it one big tool, in which case I'm going to have to depreciate it for you and you're not going to get your money back. So just be aware of it. I'm not saying don't buy the thing, just understand how that works. The other thing just on individual tax returns I just wanted to mention is we do get pre-fill, and this is probably starting to jump into July, but there's no need for you to lodge your tax return on the 1st of July. You have plenty of time, and we would prefer you to wait a few weeks until the information flows through to the ATO.
Yeah, so what Jo is talking about there is that, we have to wait for, if you've got shares in companies, for those particular companies to lodge that all of the dividends that are linked to your tax file number have come through to the ATO. Same with interest in the banks, same with your employer who doesn't have to have your STP finalised on the 1st of July. They do have a little bit of time to do that. And it's really important that all of that information that does flow through to the ATO, because there's quite a bit these days, has come through, because we don't want to miss anything. And if we do, it can mean an amended tax return, and you may have to pay some tax back as well.
Exactly. It's just not, I just don't see
It's not worth
the
it.
reason you would do it, but so many people still do. All right, so come 1st of July, let's not worry about individuals again. There's not too much you can do once it comes 1st of July. If you're an individual, you need to wait a little bit, go get your tax done. If you're a business, there's quite a number of things that we have to do. So let's run through. I've got a list of 10 things. I'm guessing you have the same list. If not, you can share mine. But let's start with, as a business, the first thing I think you need to do after 30th of June.
Payroll. Get your payroll finalised, your STP. So for anyone who is employing someone, if you have not heard the term STP or single touch payroll, something's wrong.
Yes. Please get in contact with your accountant now.
So basically what you're doing is just going through and making sure that everything that you've reported in the payroll for the financial year is correct, and you're finalising it, sending those final figures to the ATO to go to that pre-fill for your employees.
That's exactly
employees.
Exactly right. At the same time, and this is something I would probably suggest you do prior to 30th of June if you have the ability to do it. I'm just going to, I have this at number 8, but I actually think this is probably nearly as important as number 1, is to make sure your superannuation's paid. Now, superannuation is only tax deductible if it's paid. So the fact that you've accrued superannuation as at 30th of June, it doesn't mean that it's a tax deduction until you've actually physically paid that money.
And then if you pay it late, it then also does not become
deductible.
A tax deduction. So it's really important to make sure you're paying that super on time.
Okay, let's keep going. So pay your super. If any super that was accrued between the 1st of April and the 30th of June needs to have been paid by the 28th of July. But if you can pay it before the 30th of June and it has hit the superannuation accounts, then it is tax deductible in that year. Otherwise, it will be tax deductible the next year. So next one.
So next one's payroll tax. Look, this isn't applicable to everybody, and it is a state-based tax. So it does depend which state you're in.
Okay, so in New South Wales, we're just talking about payroll tax in New South Wales. The day that it's due is the 28th of July. There are different regimes in different states, so check what yours is if you are subject to payroll tax. Again, there's different thresholds in different states. There's all sorts of things. If you're not sure, ask your accountant. They'll be able to tell you if you should be paying payroll tax.
Yeah. Now, the next one, Joe, is it doesn't necessarily have to happen in July, but it is something that has to happen at the start of the financial year, which, again, we have done, I think, at least 1, if not 2 episodes on this, which is your taxable payments annual report.
The TPAR.
Yes, TPAR.
So that has to be lodged by the 28th of August, but I would suggest you get onto that as well pretty quickly.
Yeah.
Only specific industries it's applicable to, mainly to do with building, cleaning, IT, couriers, security. I think that's probably about it. But if you are not sure, again, speak to your advisor. Do you need to lodge a TPAR? It is a report to say what contractors you've paid for the financial year, how much you've paid them, whether there's GST on it. Shouldn't be too difficult to lodge, but you have to get it lodged.
Yeah, and that's just part of the ATO's data matching.
Yeah. The next one I have on there is and this is specifically to New South Wales, but I do know that some other states have similar things. It's called the Long Service Building Corporation. So in New South Wales, if you work in either the construction industry or the cleaning industry, there is a corporation where long service is actually accrued on your behalf, and as a employer in that industry, which I'm not, but if you were, you have to report how much you've paid your staff. So yes. I would get on and have a look at that, and again, you might need some help with that, but you need to lodge that.
Yes, definitely.
So then we need to start getting ready for sending stuff off to our tax agent or our accountant.
Yeah, so you need to be reconciling, making sure your bank reconciliations are all up to date. Again, this is something that we would hope would be done during the year, so it's not a massive task to do at the end of either the quarter or the year, depending on whether you're reporting quarterly to the ATO. But it's definitely something that needs to be pulled up to date because we can't
do much until it's reconciled.
No.
The other thing we'd really like you to do is maybe just have a copy of your bank statements as at the 30th of June, because you might have reconciled but the balance doesn't kind of agree. We need to know what the balance is. As accountants, we like to make sure everything ticks off and agrees. So any bank accounts that you have, they could also be term deposits, loan accounts, anything like that. If you're in business, we really would like to know what those balances are. So just collect all that information. We may not need all of the statements, but we'd really like to know what the balance is as at the 30th of June.
Yeah.
My next recommendation is to go through your accounts payable and make sure that that's all reconciled. Make sure that everything that you have, you're expecting to get as an invoice has been sent in, that you've recorded it, just making sure everything makes sense there. Sometimes things might have been paid and you've left them sitting in accounts payable and they need a little bit of tweaking.
So this is just a list of the bills that you have outstanding that still need to be paid from your business. You could have received the bill on the 27th of June and it's not payable until the 10th of July. But it's just making sure that that's recorded, and depending on whether you're reporting on a cash or accrual basis will depend whether the tax deduction sits when the bill comes in or whether it's when it's paid.
That's right. But it still would be good to know what's there, I think.
Absolutely.
Accounts receivable, again, similar situation. What is owed to you, go through the list and have a look at it. It's probably a good time to have a look if there's anything that needs to be written off.
Yeah, any bad debts that you need to remove from that list.
Or what are you going to do with it? Make those decisions. So often I know even with us, we sit there and I'll go, oh, that hasn't been written off yet. I think we need to sort that out. Or what's happened with that invoice? Why has that not been paid? We don't, I know people are looking at it all the time, but as a business owner, I probably don't spend as much time looking at it as I should. But yeah, definitely 30th of June is the time to go through that list and work out what's there, what shouldn't be there, and ascertain what to do with it from there.
Yeah.
The next one.
So the next one is lodging your BAS. So your June BAS, it is an end of quarter as well as an end of financial year, so double whammy, but same obligations as throughout the year. The BAS has to be lodged.
Yeah.
So within 28 days from the end of the quarter, if you're lodging it yourself, if you do go through a tax agent, you do get a little bit of extra time.
Again, extra 4 weeks. One thing I like to do when we're lodging BASs is we actually go and have a look at what we've lodged for the whole year versus what we're thinking we need to lodge for June, because sometimes things have changed in between times, particularly with your PAYG withholding and your wages. You want to make sure that the wages you've reported to the tax office agree with the wages that you're going to be reporting on your BAS for the year.
Yeah.
Again, with your GST, is there anything you've missed? So it's sort of a good time to have a look at what you've done for the year versus what you think you should be doing for June, and making sure it all is consistent.
Yeah. And then the last one that we've got there, Jo, is about gathering your documents.
Yeah, exactly. So you've got everything sorted, you're ready to go. Time to pull it all together, let your accountant know that you're ready to go. Everyone has different circumstances. There might be different things that they need to provide. They might have bought a car this year under finance. They might need to provide some information on that.
Yep.
Making sure you've got all your bank loan documents together, ready to tell the tax office, tell your tax office, tell the tax agent if there's anything different this year that they need to be aware of. And yeah, get on with it.
And I think included in that, if you're someone who has livestock or inventory, is making sure that you have your stock numbers at the end of the year as well, because that's something that will need to be reported, and we will need it at the end of the financial year.
Definitely. Thanks for reminding me of that one. Livestock's a big one, because we often, when people come in, we do a lot of work for farmers, and how many stock did you have on hand at the 30th of June? And I think it's just wise to keep track of that. We need to know. But if you've got that recorded, makes it so much easier.
It does, definitely does.
Yeah. I think that's about it for the Table of Knowledge today. Another fairly long one. I think this is a pretty long episode, to be honest. Thank you for listening.